Hi, this is Jill Brotman. I'm with App Properties, and I'm visiting today with Ben Cohen, Managing Director at Guaranteed Rate. Ben has been in the biz for 16 plus years. He's based out of Chicago. However, he can lend in all 50 states. Ben's phone number is 773-654-2055. And Ben's direct email is ben@rate.com. Hey, Ben.
Hello, how are you?
Good. How are you?
Good.
So talk to me about interest rates. Let's hear the down and dirty. What's going on?
They're 0%. Interest rates are really good. Interest rates are volatile and fluid, just like the rest of the world. We've seen interest rates be anywhere on a 30-year fix between, 3% and 4% over the last couple months. Interest rates are more of a function of what the Fed is doing and their bailout plans. And, not to get too technical, but the Fed is basically buying mortgage-backed securities, which is providing liquidity to the marketplace due to all the supply and demand, right? When money becomes cheap, there's a lot of people who want to buy a home and refinance a home, and there's only so much money to go around. So that's why you've seen the Fed kind of step in and buy these mortgage-backed securities, which has driven interest rates down to their lowest levels since I can remember. That's on the conventional side of things. On the jumbo side of things, for the last 5 or 6 years, you've seen jumbo rates be the same as non-jumbo rates, if not sometimes better. Now you're seeing that spread start to widen out a little bit. So, if a conventional mortgage rate is 3.25, maybe you're seeing 3.5 or 3.75 on a jumbo rate. So, and that has to just do of a functionality of liquidity, capacity. Capacity is a big thing for a lot of lenders right now. So you've seen a lot of lenders start to stop to do jumbo financing, not because of the concerns over the environment, but just sheer capacity. There was a release, I think, that went out from Wells Fargo the other day, or this was maybe 2 or 3 weeks ago, where they will only do a refinance they will only do a refinance on a jumbo mortgage if you're a current client of Wells Fargo and you have a minimum of $250,000 deposited in the bank with them. Otherwise, they don't want it. So you're just seeing a lot of companies and banks and mortgage lenders such as Guaranteed Rate just try to control the volume. And obviously, with the jumbo worlds, when you see the employment numbers coming in like you see, that doesn't make lenders feel very warm and fuzzy, right? If you've got 35 million people that have lost their jobs so far, that's a huge number. We've never seen anything like that before. So, obviously the last thing a lender wants to do is give somebody $1 million mortgage and then all of a sudden that person not be able to make that mortgage payment. So, I guess the long-winded answer to your short question is rates are awesome. I have been doing this almost 17 years, and I think we are all just jaded by what's real and what's not and what's realistic. I personally believe that if you get a mortgage under 5%, historically speaking, we're doing pretty well. But when you see all these numbers being shown on the TV or the internet, and a lot of them just aren't realistic. But at the end of the day, again, the long-winded answer is rates are awesome. So
Thank you. A fair amount of loans are sold off to third parties after closing. Is this a practice that you think will still take place with the new mortgage guidelines?
you hope so, right? Like, this is a hot topic right now because as people enter into forbearance, some of the things I don't think people really understand, right? Let's just say you have a mortgage still and you're escrowing for your taxes and your insurance, and you live in Lake County as an example, and that Lake County tax bill is due on September 1st, but you decided to go into forbearance on your mortgage and you haven't paid your mortgage payments for 3 months. Well, now that loan servicer has to now front the real estate taxes for you because they haven't collected 3 months worth of real estate taxes for you. So there's a lot of pressure on the loan servicers out there while we try to figure this stuff all out. And at the end of the day, nobody has answers, right? This is all uncharted waters for all of us. So at the end of the day, people call me and ask me, should I go into forbearance? Should I not? And at the end of the day, make your mortgage payment, right? You have to make your mortgage payment. You signed a promissory note. You said your ability to repay, we qualified you for a mortgage. It's the absolute last thing that you should try and not do. Going into forbearance just kicks the can down the road at the end of the day, and you still owe that money. But I try to get people, there's a greater understanding as more people try to go into forbearance, that's going to have a significant impact on the way mortgages are written and how they're services and how they're sold. So, at the end of the day, I can't tell anybody what to do or not to do, because I don't know what their specific situation is and how they spend or save their money. But at the end of the day, part of the problem is people are going into forbearance that shouldn't be going into forbearance. If you haven't lost your job, you haven't taken any reduction in salaries, forbearance is not just there to say, hey, don't pay your mortgage for 3 months, right?
Right.
So, part of the problem is they're allowing people to go into forbearance that technically shouldn't go into forbearance either. So, everything's changing with regard to the rules and the regulations and all that good stuff. But, you want to avoid that at all possible costs, because the other thing we don't know is what is going into forbearance mean down the line.
Mm-hmm.
You all of a sudden went into forbearance and now you want to buy a home a year later, you might not be able to get a mortgage.
Mm-hmm.
Oh, how
Right.
are they forbearance? So that's the lot of uncertainty as far as how all that stuff goes. But
Yeah. Yeah. Day at a time, right?
hour at a time.
Yeah. Ben from Guaranteed Rate, thank you so much for your time. You can reach Ben at 773-654-2055 or ben@rate.com. Ben, thanks again. Have an awesome day.
Thanks for having me as always, Jill.